Wasabi wallet. Unfairly private.
What's up, everyone? Ben with the BTC Sessions here, and this is your daily session.
Hodl that Bitcoin.
Before we dive in, of course, shout out to sponsors of the show, Ledn.io. This is where you can use your Bitcoin for a few different services, one of which is a Bitcoin savings account where you can earn interest on your Bitcoin paid in Bitcoin. Another is a Bitcoin-backed loan. This is where you can use your Bitcoin as collateral to secure a Canadian or US dollar loan. You may find this particularly useful if you're trying to get your hands on your dollars, but you are worried about selling your Bitcoin because you think that the price may appreciate in between before you can buy it back. Well, in this case, this could be for you. And just so you know, that sits in a dedicated auditable account, so you can check the address 24/7. Your Bitcoin is never rehypothecated or lent out in this instance. And finally, if you're a huge Bitcoin bull, then you can check out B2X. This is where they allow you to actually get double the exposure to the price of Bitcoin. So if you want to check out any of those, down below there's a link, and if you click that link and opt to get a Bitcoin backed loan, they'll actually credit you with an additional $50 worth of Bitcoin. And secondly, if you're into Bitcoin, of course, privacy is an important thing. One of the things that I use to help with that is NordVPN. This is a way to help hide your IP address. So privacy obviously there, and it also encrypts your browsing data. Beyond that, it has a whole bunch of different added benefits, one of which I really enjoy is being able to unlock geo-blocked content. So if you can't access something from your country, just change your listed country with NordVPN and all of a sudden, boom, that content is unlocked. So if you want to check out, there is a link down below and you get a special deal. You actually save 84%. Last I checked, it was $3.49 per month, but that may have changed now that I see this has dropped further. So yeah, be sure and check that out. Let's move into the news. We've been on a wild ride with Bitcoin price as of late. And one of the things that I've been listening to a lot that I quite enjoy is Plan B's stock to flow model. And so stock to flow refers to taking into account the current existing stock of Bitcoin. So there's over 18 million Bitcoin that have already been mined versus the amount of Bitcoin coming onto the market actively. And so the stock to flow model he has used from past data to try and map out future prices of Bitcoin. And what he found was a high correlation between the stock to flow and the future prices of Bitcoin. In fact, like a 90, in lower cases, a 95%, 95% correlation, which just isn't present in most things other than commodities like gold. This stock to flow model, I'll show you, somebody made actually a live chart of the stock to flow model. So you can see that obviously the Bitcoin price can go above and below the stock to flow chart. So what we're seeing here is it's better to, I guess I'll go over here. It's better to look over here where the price has not actually gone yet for future dates. And so it shows stock to flow based on a 1-day chart and based on a 365-day chart. And so you can see the 1-day chart says that typically around this time we should be around 9,300, but the more accurate 365-day chart has us at around 85.30 moving forward from here, and that gradually lifts. Now, why is there's this sudden increase here in around May of 2021, May of 2020? Well, that is the halving. That is where Bitcoin issuance gets cut in half. And what happens with stock to flow there, it impacts the potential price and it goes up way higher. So prices of over $100,000 could be possible here. Now, this is not yet proven. Yes, you can take the data from the early days from 2010, say, to 2012 and move forward with it, and it will give you a pretty close stock to flow of exactly the price action we've seen thus far. But past performance is not necessarily indicative of future performance. So time will tell to see if this model actually works. But Plan B was saying that based on the model that he's put together, if it holds, then this could be a rare opportunity, this dip that we've had where we went into the 6,000. So we were sub 7,000 for a little bit. He's saying that he wouldn't be surprised to see a bounce in the near term before the end of the year to have Bitcoin back above 5 digits, so back above $10,000 before January 1st. So his actual tweet, he said, "Call me crazy, but it wouldn't surprise me if BTC closes 2019 at $10,000 plus." Opportunities like this, the Bitcoin below the stock to flow model 6 months before the halving, are rare. So yeah. Now there is some opposition to this. Willy Woo, who is also he likes to comment on the markets quite a bit. He's a statistician. He said that we would need to finish November at 8,300 to skip the bear market. Otherwise, we could be sitting quite a bit lower for the next month. So basically, they're saying it hinges on the end of this month ending considerably higher if we don't want to see a bearish December. So I don't know. I don't know if the end of the month particularly is really going to impact anything specifically, but I am very interested in this stock to flow model, and I think it's really it'll be a hell of a time to see if it holds. Now, of course, we can see here the actual price after a halving. So there's a halving here. The actual price gradually makes its way up to meet the stock to flow model, and then often overshoots it, as we did in 2017, as we did in 2013. So yes, the stock to flow here is calling for well over $100,000, but if history is any indication, if it happens to rhyme, well, then we could overshoot this 100K by multiples, by like 2, 3, 5 times. Anybody could guess, but yeah. I don't know. I feel like this does have some merit, and I think it will until it becomes common knowledge, or until the market cap of Bitcoin becomes so large that it doesn't make sense to price Bitcoin in dollars anymore. So I don't know. Let me know. Here's an article, though, refuting the stock to flow model and saying that it has some flaws. And so I figured I'd touch on some of these. So what they're saying is that Bitcoin price is directly linked to network activity. So let me just read this here. It says, I'll read it verbatim and then I'll give you my thoughts. Bitcoin's network value expressed in USD market cap has a high correlation with the level of network activity expressed in dollar transaction value. This chart shows the direct link between Bitcoin price and the 12-week average USD transaction value. So you're seeing the price and the value that's being conveyed over the network. And then they go on to say, thus, it is Bitcoin activity that has been driving prices. And if anybody knows anything, it's that correlation does not always equal causation. Furthermore, it seems that the price tends to happen first, and then you see the peak afterwards in network usage as far as USD transaction value. So that would seem to imply that the price peaks, and that spurs people into moving around and buying or selling Bitcoin. At least that's what this chart is telling me, which leads me to believe that this individual may not have thought through this chart. How could an uptick in USD transaction value retroactively affect the price? So that doesn't quite make sense to me. So they reference active coins, and they say how, another thing that I didn't like here is they said, in the chart above, the hotter colors show the proportion of Bitcoin that have been on the move within the last 24 hours. So all of these hot colors here, obviously in the early days, all the coins were new, so all of them would have moved recently, but then you can see with the darkest of the colors here, that means coins that haven't been moved in 5 years. And of course, the first 5 years, that would have been none of them, but that proportion is growing. And so that can amount to either coins that have been lost forever, or coins that are in deep cold storage that won't be moved for years to come. The thing that I don't like here is that they say the sleeping coins don't add value, but their weight is increasing over time. So I disagree that sleeping coins don't add value. What is value to you? For me, it's an alternative store of wealth in comparison to something like stocks or precious metals, or, holding cash under your mattress. It's an alternative store of value. And so those sleeping coins for me add a shitload of value because I'm holding them for a purpose, for a long-term store of value. And I don't think that anybody should feel guilted into spending coins that they plan to hold for an extended period of time. In fact, let me just do this for a second. I tweeted this out the other day, and I was talking about, I saw something where people were talking about holding, like hodling, was a negative thing, and that people should be actively spending and moving their coins. And so I said the following. Here we go. I said, hodling is using. I am using Bitcoin as an alternative store of wealth to stocks and precious metals. Don't get shamed into spending your sats if you really don't want to. I'll spend mine when a merchant creates a good that I really want and refuses to accept anything else. So what I'm saying here is I will spend Bitcoin either, and I should add one little caveat. One, if Bitcoin is incredibly more convenient than traditional means of payment, or if a merchant makes such a good product that I really want and I cannot obtain it with dollars, then I could be convinced to spend Bitcoin. Perhaps moving forward, as people place more value on Bitcoin, they may offer further discounts in order to entice people spending their Bitcoin, and that could be attractive depending on the amount of discount that is offered. And then you may get into an instance where something like a spend and replace might be useful. But for myself, when I think about it, spend and replace typically incurs some sort of a fee, either in the repurchasing or in the repurchasing and the spending itself. And so for that reason, I just want to hold my coins because I want that stack to grow. I've made some purchases way back in the day, just as a novelty, 2014, 2015, when I hadn't really seen any price appreciation. I was buying coffees left and right with Bitcoin. And a lot of those were now quite expensive, and Bitcoin is like $300 and you spend, $20 on Starbucks for a couple of lattes and a meal for yourself and your now wife. Well, that amounts to a lot in the future when Bitcoin is like $10,000. So for me, I don't think that holding should be considered a negative. If that's how you want to use Bitcoin, then go ahead. At the same time, I'm not going to fault you if you prefer to use Bitcoin transactionally, especially something like Lightning Network. It is inherently more transactional, and I don't have as much of a problem spending sats in small amounts, like as tips and stuff via Lightning, because it is fun to do, but by and large, I'm holding. I'm not spending my Bitcoin anymore because I see more value in holding it long term. Anyways, I'm going to move on from there. Actually, I guess this is kind of a segue. Speaking of spending your Bitcoin, for the last 9 years, there was something called Bitcoin Black Friday, and there was a website hosted where it had all of the different merchants that were offering Black Friday deals if you spent your Bitcoin. Well, that website is shutting forever. As the founder says, the mission is complete. More interestingly, he has fallen out of love with the idea of using BTC for consumer payments, and he says that now Bitcoin is better as an investment and a new financial instrument. And he said, although other alternatives like Bitcoin Cash exist, I think that the fundamental use case of Bitcoin is and remains a form of investment and a new financial instrument. So what he's saying here that the ability to transact with Bitcoin is at most a needed function, at worst a tacked on benefit. With both my career and personal views, I've drifted away from using Bitcoin as a new payment rail. I think the initial mission that the site had is very much accomplished. Through this, he kind of took a dig at some other altcoins at the same time. So what he's saying is, his initial foray into Bitcoin, he was very pro spend. It kind of sounds like he went through the same transition that I did, where he's like, okay, we need to get this. We need to get merchant adoption, get people spending and accepting and receiving and all of this. But he's come over time to realize that this is first and foremost, potentially a great store of wealth, and that the merchant part of it may come subsequent later down the line. In saying that alternatives to this exist in the form of other altcoins, he's also kind of backhandedly saying that Bitcoin is the only good store of wealth, and that something like Bitcoin Cash, in that it was built to be spent, it's not a store of wealth at the same time. I find this particularly interesting, that somebody who came into the space specifically really trying to bolster this spend mentality has turned around and said, you know what, I think that it's better for this to be used as a store of wealth and an investment. So, interesting. One other fun article I wanted to touch on here. Well, not fun for the person involved, but somebody on Reddit posted that they forgot their brain wallet and thus have lost $13 million worth of Bitcoin, which is about 1,800 BTC. So this person said that they had a brain wallet, and a brain wallet is where you have a string of words that you put together, some sort of a phrase, much like the one that you would get when you set up any wallet, but it's not recorded in any way, shape, or form, and often it'll have a password associated with it as well. He went to unlock some coins that he had in 2016, and it looks like his brain wallet is just not working. So either he screwed up in writing it down, or he forgot the passphrase also associated with it. So kind of tough luck for that guy. It really sucks, but a lot of people were saying, one, this is either just a really stupid idea and you should be using like a dedicated device, like a hardware wallet, cold card, Trezor, Ledger, whatever would be better than just a straight brain wallet for no reason. Or two, this is fake. So somebody was saying, well, one of the Bashko, a moderator on our Bitcoin, he said it's likely fake. He said that there was, according to data from monitoring resource BitInfo Charts, only 2 wallets with an initial balance of around 1,800 BTC appeared in 2016. Both saw multiple subsequent inbound transactions, while 1,000 Bitcoin left one of them in 2017. So, looking at the data, there doesn't seem to be a lot to support this guy's story. But regardless of whether or not this is true, it does beckon to the fact that you do need to be careful with your storage method. Sometimes doing trendy new things or overcomplicating a process can actually be a detriment to you, and you could lock up your coins if you aren't familiar with how to unlock them later. So keeping it basic initially, unless you feel you really need to or you're an advanced user, is probably your best bet. The majority of people, for basic purposes, will be fine with a regular hardware wallet and plugging it into their computer and going. Those that are looking for deeper security may set up like a multi-sig situation where you need 2 out of 3 different devices to access. And then still others may go to a provider like Casa, where they provide a third key in an equation like that. So if you lose something, then as long as you have one of your keys, you can go to Casa and they'll help you unlock the coins with their singular key. Either way, yeah, it just, again, beckons to the fact that you have to be conscious about the way you're storing your coins and remember how you're doing it. And with that, I guess I'll wrap it up. Guys, thank you so much for watching. As always, do hit like, subscribe, and share. Do hit that share button. It is always awesome to get more people in here. If you want to help with the show in another way, you can do a couple things by hitting any of those links for the sponsors down below, Ledn or Nord. And third, check out Wasabi Wallet. That's always great for privacy. It's good to break links between you and your coins because there may be some prying eyes that you don't want looking at your funds and diving into your finances. And yeah, financial privacy is important. And finally, if you really like what you saw, you can always hit me up with a Lightning Network tip at my tippin.me page. With that, I'm out. I will see you guys tomorrow for your daily session.